Well, with oil at over $105 a barrel and gold hitting new highs, investors are wondering where the best place is to park their money. Well, our next guest says traditional diversification strategies aren't working, and there's never been a better time to be a, quote, disciplined speculative investor. To tell us what this all means, we're joined by Doug Casey, chairman of Casey Research. He's a renowned international investor and author of Crisis Investing, which was #1 on the New York Times bestseller list. Doug, for 29 consecutive weeks. Boy, I wish my book had sold like that.
Me too.
Congratulations.
Well, what you're going to need is a crisis that gets people's attention. And at the present moment, I think we're right in the middle of what may prove to be the biggest crisis in a couple hundred years. But at the moment, we're in the eye of the storm. So,
okay, well, Doug, unpackage that for us because, you know, we have had various people come on this show, the naysayers, who do feel that this is a unique moment. Why do you think we're in the proverbial eye of the hurricane right now? What's leading you to that conclusion?
Well, governments, especially through their central banks, have been responsible for building up a gigantic pyramid of debt and inflationary credit over decades, and it's finally come unglued at this point. They papered it over by creating trillions of dollars of more currency units. And they papered it over for the time being. But as we're just in the eye of the hurricane. We are going to come out the other side. And I think it's going to be even more ugly than it was in 2008. So
what do you do?
Well, it's very hard to be an investor.
Man of the life wraps.
Well, it's going to be very hard to be an investor in the Graham Dodd mode because there are going to be wild fluctuations in commodity prices, in the prices of everything, securities prices. There will be little predictability. It's going to be very hard to be an investor. It's going to be even harder to be a saver. A saver is somebody who produces more than he consumes and puts the difference in a safe place, which usually means the bank, usually means dollars. But as these governments are creating trillions of new currency units, it's going to wipe out savers, potentially. Disastrous.
So explain to us, because it seems a bit counterintuitive to me that at the same time you'd advocate being a disciplined speculative investor, considering what a tumultuous environment we're in. How do you do that?
Well, first of all, we have to define what a speculator is. A speculator is not a trader who's always in and out of the market. He's not a gambler.
He's not a gambler.
It's very different from putting your dollar on 22 black and hoping it comes up. A speculator is one who takes advantage of politically caused distortions in the marketplace. If we lived in a free market society, which we do not, a speculator would be about as useful as a man who makes buggy whips. But we live in a highly taxed, highly regulated, very inflated society, so there are lots of speculative opportunities. I'll give you the classic example of the type of thing I'm looking for. When gold was $35 an ounce, it was a one-way street. It was a sure thing bet because it was being controlled by the government at 35. You knew it had to explode if you understood economics. Now, there are lots of speculative opportunities. The more intervention the government has in the economy, the more distortions it creates, and the more opportunities it creates for speculators to capitalize on those distortions.
Let's talk about your roadmap to capture some of those opportunities. You have, I think, to some people, considered a controversial idea in terms of portfolio weighting. You want to see 10% to be your speculative investments, where you could have huge upside, and the other 90%, you want to play it safe.
No, that's not actually correct.
Okay.
What I would say is this, is that in order to survive in the years to come, you're going to be forced to be a speculator, whether you like it or not. Now, the question is how you proceed about being a speculator. And my ideal speculative portfolio would be to divide your money into 10 portions, equal portions, that are unrelated, uncorrelated to each other, but each of which, in your subjective opinion, because all of these, what's going to go up, it's all subjective, has the ability to go up 10 for 1 over the course of a business cycle. Now,
so give you a menu of examples.
Well, let me give you what I think is an ideal speculation at the moment. I would be short bonds. Bonds of all types are a triple threat to your capital. First of all, they're denominated in dollars, and the dollar is going to reach its intrinsic value over the next cycle, I believe. Secondly, bonds fluctuate inversely with interest rates, and interest rates are being artificially depressed right now, and as they go back up, that's going to devastate your bonds. And the third thing, of course, is the creditworthiness of the issuers of the bonds, including governments. So bonds are probably, being short bonds right now is probably as good a bet as being long gold was in 1970 or 71. That's one example. But I can give you others.
What about mining stocks? Long mining stocks right now?
Well,
PDAC's going on. Should those be happy campers down there at the conference?
well, they are happy campers because gold's over 1,400, but I've got some good news and some bad news. I was telling people that if I could call their brokers to buy gold and mining stocks 10 years ago, I would have done it. But gold at 1,400 is not the same investment as gold was at 250. That doesn't mean you shouldn't own gold, but today you should own gold for prudence, for safety, for insurance. Most of
Not
these,
because you think it's going to $2,000 or $3,000.
it will. I
Okay.
believe it will, but that's not the reason you buy it today. Most of the speculative upside has been taken out of it. But I try to look at the bright side of everything, and with these governments creating trillions of currency units now, it's going to create more bubbles. I believe one of the bubbles is going to be in gold. It's not a bubble in gold yet, okay? Gold is not a particularly good value, but still you have to buy it because it's the only financial asset that's not simultaneously somebody else's liability. But I think in terms of today's dollars, it's going to go to 2,500, 3,000, and will turn into a bubble at some point when people panic out of currency. A better one, however, is these junior mining stocks, which are also not cheap. They're not cheap. They're not bargains
Tell
anymore.
us what you look for, because you know Canadians love their junior mining companies. It's our little Las Vegas here. So what do you look for? What are the red flags, and how do you avoid BRIEX?
I know, I do too. Well, actually, during the 93 to 96 bull market, BRIEX was one of my biggest winners.
Oh, really?
The simple fact that it was a fraud didn't mean that it wasn't worth buying before we knew it was a fraud.
Okay.
Well, as long as you sold it before it went to zero.
Oh, I did. And the reason I sold it was because it had a market cap. I had a big position, and I sold it because the market cap of it was more than for Freeport McMoran, which had spent billions and was producing and so forth. I go, why should I own this spec? I had time to sell. And I got lucky. I didn't know it was a fraud. But to avoid future frauds, we have an 8-point program. I call them the 8 Ps. And number one, by far the most important one, is people. Because good people can turn a lemon into lemonade, and bad people can screw up absolutely anything. So that's number one. We always get to know the management
Okay, and
thoroughly.
we're just running out of time. So if people want to see the other 7 Ps, where do they go?
Why don't they go on our website?
Okay, what's that? Tell us.
kcresearch.com. And I have a free weekly blog, which I don't mind promoting to you.
Okay.
That comes out every Wednesday, where I talk about everything from polo to cigars to investing.
Well, excellent, Doug. Thanks for a tour around the horn of Doug Casey's Investing World.
Well, it's been a pleasure being with you guys.
Thanks for coming on the show.